All right, so this session's being recorded for our usage at later use, and then also for Scott as well. So thank you all for hopping on today for our sales planning for startup session with Scott Gregory. My name's Cameron Law. I'm the executive director at the Carlson Center for Innovation and Entrepreneurship. We're a center that supports students across campus as well as the region, and also entrepreneurs in the community. Our missions to make innovation and entrepreneurship pervasive throughout the greater Sacramento region. And we've really focused at really trying to tackle the baseline tools and skills that entrepreneurs need to help them get to the next level. And we recognize that a key component of building a business is the network. And we have this vision of Sacramento being a premier hub of innovation and entrepreneurship, and recognize the more connected we are and the more resources are shared to all entrepreneurs across our community, the more we can really build a robust entrepreneurial innovation ecosystem. And so we've decided to partner with Scott Gregory today to bring you this session. I met him at an angel investing group actually up at Haney Biz, and was just definitely interested in learning more about his story as a working in the startup space, and really found that he had a niche focused on helping startups scale through sales planning, and that's kind of been his focus of his career, is working in the sales space. He's a local angel investor and advisor to some startups, and so we're really excited to have his experience and his expertise as part of the group. And without further ado, I'll pass it to him, and we can dive into the content here. And wanted to say thanks for bearing with me on the technical difficulties with sharing the link, but really excited for the content that will be shared. A little bit of etiquette for today will be, if you have any questions and answers or questions, just throw them in the chat and I'll help facilitate them for Scott as we go, and we'll kind of have some intermittent stops as we go. But feel free to put them in the chat and I'll help facilitate that moving forward. So without further ado, I'll pass it over to you, Scott, and we're good to go. So thank you.
Thanks, Cameron. I think I'd like to start with a couple of thank yous. First, to you in the center. I think these kind of things are super fun to do, and I think whatever skills or experiences we have in life, it's important to try to pass them to the community. So I'm happy to be here. I also appreciate you making this really easy for me, because I always feel like my own PowerPoint skills are just north of crayon. So the fact that the slides look pretty good because Cameron did that. So thanks. I also want to thank everybody for taking the time to show up for this. I'll try to make it worth your while, and particularly the folks that are founders and creators. I have a friend of mine that I've done a number of businesses with. He's always been the operator and the idea guy, and we have a running joke that if you put us each in a corner for a week and said, take a yellow legal pad and put all your new ideas on it, he might run out of a pad after an hour, and I'd be in danger at the end of a week and not having a single line on there. So I have a real appreciation for folks that are actually creative and have the guts to try to go out and build something. In my own career, I've been much more of an implementer and execution person. And that's been what I've been able to contribute to folks that are in startups and when I've been part of them. So I'm going to try to pass on a couple lessons. When Cameron and I talked about this, we talked about a number of things. We kind of landed on doing some planning around execution. So that's what we're going to cover. Please feel free to jump in with any questions. As Cameron said, we've got some time built in for that. And I think it'd be a lot more interesting to have this be back and forth and not just a long-term lecture for me. What I'm going to do is go through reasonably quickly sort of my point of view on planning, a little bit about my background just in terms of where that point of view came from, which is, frankly, from a lot of smart people I've worked with. Very little of it's mine. It's really just best practice I've been lucky enough to learn over the years. And then I'm going to go with some pretty granular detail about things I think should go into a plan and why and sort of what they are. And then the third thank you I would have, I invested in 3 companies last year, one of which is a company called Aqua Oso locally. And Chris and Cameron, I don't know if they're here, the founders of Aqua Oso, were nice enough to let me use a pretty heavily redacted version of this year's sales plan that we started with, just as an example. And Cameron, I think you're going to pass along this recording and maybe even these slides as material, but we're not going to be able to pass on that redacted plan. Just I do want to respect their privacy there. Is that correct?
You got it. Yep. We'll be following up with this recording as well as the slides. So, but we will not send out that redacted plan.
All right, perfect. Okay, so I'm gonna jump in. You all can see my screen, Cameron, correct?
You got it.
All righty, that's good news. Actually, let me try to there we go. Now I can actually see. I can't see any of you, but I can see my slides. So the general point of view I have from being a part of a number of startups and advising a number is most often, though not always, the folks that have these, great ideas and are experts in a certain field don't necessarily have the background and the training in the sales piece. And you need more than just a great idea. You do need execution. And that's, as I said, often not really a core competency of founders. Anything you want to do, from hitting a golf ball to selling a product or a service, there's a right way to do it. And again, these are best practices. I particularly like the discipline of writing business plans and sales plans because it really forces you to challenge your assumptions, go through what ifs. And I often find as I'm writing these things, I'm changing things all the time. And last off, I can tell you as a funder and being partnered with a number of other folks that do funding, if you don't really have an articulated plan for how you're going to execute what your business looks like, it's very difficult to get funding. So I think it's important. Real quickly, sort of where my approach came from, a little bit of background, and Cameron and I laughed about this. This is usually where speakers will spend an hour kind of beating their chest and talking about their background. And frankly, I throw open my mouth a little bit every time I hear that. What I would say is I've spent 30 plus years in sales roles. I've been an individual contributor, a regional leader. I've run a number of national sales teams with $1 billion plus pipelines. I've had some good exits. All along that timeline, I've been fortunate to work for some really smart people. I've tried to read every book I could find and go to every seminar I could. So along that way, I've learned a lot of pretty good lessons to share here. And I think augmented by that, it's probably, 15 years ago, when I had good years, I started investing in local businesses with friends. And I'm currently started to partner up in a local new VC fund, Winning Street Ventures. I know a couple of the folks from that are on the line here. So I've also got that married up a little bit with working with a number of startups and having a lot of the startup conversations. So anything to inject, or just want me to keep going, Cameron?
Keep on going. You're good.
Cool. Just kind of some general principles around a plan. There's a lot of ways, and I think a lot of practices to build these things. I know, Cameron, you've got some lean methodologies and other things. I think, anything that's proven and good is fine. I think there is great variation with your business and your circumstances, what you might want to include in a plan or not. You may want to take pieces from this. That's all fine. To me, what the most important thing is, as you embark on going to market, is you want to know what you're going to do, how you're going to do it, what all the dependencies that are involved are, and how that's going to impact, your risk and your execution. And, once you decide on those things, how you're going to measure and track them, which I think is a really, really important piece to being successful. I find these are best if they're part of an overall plan, but they certainly can be done as a standalone too, and I've done them both ways. Regardless, there's generally a lot of cost around your long-term sales planning, and you ought to put some pretty good thought as to what those costs are. That's usually pretty simple, but if you overlook it, it can be pretty important. The other two things I really think about this are, one, these need to be living documents. I came out of a lot of the software consulting world, and I saw a lot of things, hit the desk, cloud of dust, super impressive, and then never be looked at again, and they become shelfware. I really think these are important to revisit on a quarterly basis to adjust your numbers, your planning, your execution. In fact, the plan that we use as a basis for this is a really good example. It was the original plan for the start of the year. one of the reasons we're not too worried about using it is it's completely changed as of when COVID hit. That was around the time of our quarterly review, and frankly, it made it really easy to adjust numbers, to adjust hiring, and adjust planning because we had it all laid out. And then the last thing, if I ever want just humor, I'll look back at plans I wrote and I'll laugh at all the things I got wrong. But just the exercise of going through and having to think about those dependencies and analyze stuff um, really sets you up to build a more repeatable foundation, saves you from a lot of mistakes. And what I would call, you don't do ready, fire, aim. You really plan out how you're going to execute. So any questions before I jump into what I think common components look like, Cameron?
Haven't seen any comments in the chat, but if someone has a comment or question, please feel free to ask away.
Perfect. So this is kind of an exhaustive list. You'll even see in the example that I give, based on our circumstances, we didn't include all of these pieces. This is meant to be fairly exhaustive for all the things you may want to think about including. And frankly, you may decide some of these don't fit what you need. You may decide that you've got a couple more. That's all great. This is just meant to be a pretty inclusive list. So I'll generally start out not unlike a book or any other plan with just a basic intro. Here's where we are. Here's where we think we need to go. Here are some of the most important things that we need to accomplish, just to kind of set it up. The next thing, and I think people mostly think about first off in the sales plan, you certainly need your revenue goals. Those can be expressed as a goal. In the plan I'll show you, leadership wanted to express it as a range of goals. And they may be different types of goals, depending. If you're in a SaaS environment, you may have annual or monthly recurring revenues. You may have, if you are selling a product, just flat out straight revenue. There's a lot of ways to express that, but you need to know what you're trying to accomplish in terms of the revenue goals. Usually associated with that, there's a lot of additional objectives that are really sales objectives, not quite as numerically quantified, but just as important. For instance, you may have some geographical markets or vertical markets that are really important for you to penetrate for long-term or even short-term success. So I think it's super helpful to identify those objectives as well, not just the ones that are numerically quantified. I'm not sure if everybody is familiar with the ideal customer profile concept, ICP. Basically what you're doing, you may have one customer type, or if you're in different markets or market segments or geographies, you may have several different ones. It's really helpful to map out who you ideally are selling to, who really needs what you have, who's got the capability to pay for it and do so in a reasonable timeline. But once you've identified those, it's really, really, really helpful to then figure out what their journey is. I think one of the biggest mistakes folks make is try to sell on their terms for their reasons and try to make customers buy on timelines or for reasons that are not really in alignment with theirs. I sold software for Oracle many years ago, and Oracle was famous for hammering customers into buying on our quarterly timelines. There's probably guys like Ken Tallow on here that are kind of nodding and laughing, but that creates a lot of issues. It's really helpful to decide how your customer or customers find you, or whether you find them, what their internal processes look like and what that journey looks like, because then you can map how you go to market and what your sales processes are to that customer, rather than doing your planning independently of that and maybe setting up a lot of problems or a lot of friction. The next thing I really like to consider is who your competition is and what some of their strengths are, so you can consider where to compete, where not to compete, or how to compete. I've been in businesses where we compete both up and down, and our positioning is really different in both places. And oftentimes, if you're in a service business particularly, you may be competing against an internal function. And if that's the case, I think you need to really identify that as a competitor, because sometimes doing nothing and sticking with that internal function for a lot of different reasons can be the biggest competition that you have. Once you've identified those things, then it becomes much easier, and I think important, to break down your competitive advantage, your strategy, and the value that you have. And you can break that down as necessary by customer type, by who you're competing with, by size of deal, whatever, because those messages may be very, very different. I have a friend of mine, I was looking into a medical company the other day, and an old boss of mine, really capable guy, a mentor of mine for many years. And Steve said, so many devices never take off because they were sold incorrectly. They weren't positioned right in the market. And I think that's really true. And that's a really important exercise to go through. Once you build that, then you can start building your messaging. I think it's very true. If you cannot simply articulate what you're doing and what the value is, you don't have a whole lot of a hope to succeed if it's too complicated. So I think, whether you think of it as an elevator pitch or a 30-second pitch or some of your longer pitches, if you have time, I think you really need to then decide what your messaging is and how that's going to go out in marketing or other channels. The next two things are related, and it's funny, I tend to bounce back and forth between them because decisions you make in one really influence the other. So first one I would say is pricing. And there's a million things to think about in pricing. I mean, when you're pricing a product, there's an implicit communication of value, whether it's high or low. There's concepts of am I more interested in just growing fast and I don't care if I'm profitable? Or do I really need to be profitable because my financial resources are limited? What's my compensation doing? What type of sales structure am I building? I mean, pricing is a really complicated area. And I oftentimes will medical is a good example. I'll try to go get someone who's an expert in that area that understands reimbursement and some of the complexities of multiple marketplaces. That's something that really takes some diving in because it can put fuel on the fire. It can really hamstring you if you get it wrong. I like to really consider go-to-market and structure a strategy around that. And what I mean by that, things could be as simple as it's purely marketing. You don't need salespeople. I think of if I go to Amazon to buy something, you're never going to, in their core business, talk to a salesperson. Once you get away from that, are you going to sell directly, or are you just going to have a channel that you support? And do you need salespeople or service people to support that channel? Are you going to hire an inside team, or are you going to have outside people because you have long sales cycles, big deals, and enterprise? If you're inside, are you going to create a typical pod structure? If you're inside or outside, are you going to organize yourself by geography, where people own certain geographies and build those relationships? Or are you going to organize yourself in a vertical fashion where people are experts in different businesses or vertical areas? That's a really important distinction. I've seen a lot of folks make the mistake of, I'm just going to go hire a salesperson. Well, are they inside or are they outside? Those tend to be very different people, much like tangible and intangible are. And if you build one infrastructure and it's wrong, it's a really costly mistake. And it also becomes really difficult to scale your business. If you start wrong, you got to fire people because they may be great people, but they don't fit. Now you've got to go back and rebuild it. That can be an existential mistake, at the very least, very costly and time consuming. I like to build out the staff that's required over a long period of time. You generally are incrementally in the startup world going to get there, but it's really good to know who the staff are, what their roles are, how expensive they are. And in the example I'll show you in Aquaoso, because we built that when COVID hit, it was very easy to come back and go, okay, we're going to cut this, we're going to cut that, we're going to reassign this person. It really saved us a lot of time and made us more effective. Activity metrics are super important. You need to know, people say sales is a numbers game. I also would say you need to do your activities correctly, but there's definitely some math behind it. I talk to people all the time that identify markets. And, my next question is, okay, how are you going to address the market? What kind of activities do you need to have, and who's going to do those? So for instance, if you know how much you need to sell, what the price of a product is, and you have some idea either from your own history or some just basic market information. How many people you have to contact to get them to listen to, a WebEx demo or have a meeting. Historically, how many of those are going to convert to a sale? It's pretty easy to work the math to know how many people you need to contact, how many demonstrations or sales meetings you have to have, and then it becomes pretty easy to go, okay, how does that impact what my structure needs to look like based on my cost of sales, and is that a realistic set of assumptions? Do I really have a business here? Those metrics also become something that you need to track on a regular basis, because if you're accurate in your metrics, you'll know pretty easily if you're going to make your number or not. I mean, a good sales leader, if they have the right metrics, can tell you pretty early in the year whether they're going to make it or they got a problem. And I think this is the last page here, Cameron. There's also other metrics that are important to track. Long-term value of customers, your acquisition cost of customers, which again can dictate a lot of your go-to-market strategy, how often your customers churn and why. Oftentimes those are done at a business level plan or a business plan level. If you do not have a business plan in place, or you're doing this independently, then I think those numbers belong here. Next thing is, there's an old saw, which I really believe in heartily, which is you get what you measure. So you need to have tracking for all of this. Regular pipeline calls, which usually will include metrics, short-term pipeline, and what that term is kind of depends on the business, and then usually something like a top 5, top 10, critical deals as well, and then whatever tools you're going to need for that, because a lot of times folks start out tracking pipeline on spreadsheets. Very quickly that becomes unworkable. There's an awful lot of tools out there, the CRM kind of gold standard being Salesforce. There's an awful lot of smaller, less expensive tools. HubSpot's there, which can do some of that pipeline tracking, as well as support outbound calling and email, etc. So you really need to know how your tracking goes. Marketing, and then how your marketing support is going to work, is super important. Marketing can be a huge component or a smaller component depending on your business. I've got a note there that says all bound, which basically means there's really two types. Generally, enterprise customers, you're going to need to reach out to and find them and try to penetrate them. Smaller customers, larger volume, smaller sizes, tend to be more reachable by marketing. And it's really nice when your phone rings as versus having to go out and find them. Tends to be a little less costly and easier to do. And then the last three things on here, these are things that I particularly find important. Some people don't like to go to this level. I like to build a task matrix pretty granularly, particularly around hiring, training, scripting, success milestones, etc., and really time box those and have someone in the organization that owns them, and then have a regular review schedule, usually quarterly, like you'd review the plan. If you fall behind on the basic tasks, just like if you fall behind on the basic metrics, you generally don't make your number. So I think that's very important. I'll show you an example of that. Much like a business plan, and this can be in the business plan, I like to build a matrix for risks and how to mitigate them. And one of the things I find is that's one of the last things you put in a plan. Usually going through that will force you to go back through all the other parts of the plan and change some of your assumptions and maybe some of your go-to-market strategies. And then last off, I love having smarter people, more people with a different point of view weigh in on these things, because we all miss things and we all have our own point of view. If you are just a single shingle, you're by yourself, you may need to do this in a vacuum. Hopefully you can find some other folks. But if you do have a group, and hopefully you do, there's a lot of different tools from SWOT to a million other things. But I generally like to include an appendix in the plan that references any one of those, just so you've got some of the core raw data you can go back to and look if you ever want to. So Cameron, that's kind of the run through of the components. You want to take a break for sort of any
Yeah,
questions,
let's see if
comments,
there,
etc.?
I can pose the first question, and then if anyone else has a question, feel free to put it in the chat or unmute yourself and ask Scott. But my question was kind of around metrics and building those kind of conversion rates. So what's like your recommendation for, an early stage startup that might not really fully know, I'm converting 20% of my demos to this to close, or however that process ends up working. I'm kind of curious of, when you're initially building that plan, how do you build, do you kind of build a threshold of this is best case scenario, worst case scenario, or how does that go about building those conversion rates?
Yeah, that's a good question, Cameron. It's, ideally you've got concrete information, right? Maybe you've been around for 6 months, you've talked to some folks, and, you've got pretty good data. In Aquaoso's case, we had that. If you don't have that, then I think you go to some, either primary or secondary research, where I would either reach out to folks that are in similar businesses, or if you got a friend who's on the sales side of the business, talk to them. There are general ratios across different businesses that hold pretty true. For instance, in any consulting business I've ever been in, you ought to run about a 3 to 4x pipeline. So if you want to sell $1 million, your non-weighted pipeline, just your gross pipeline, ought to be about $3-4 million. In a lot of SaaS businesses, that have pretty good value for customers, you're going to have to get a hold of 3 or 4 people to get to a demo, and somewhere between 2 and 4 of those, once you get to a demo, depending on how tightly you qualify them, are going to buy. So you either ideally have those numbers, or if not, I would either do some web research, or better yet, reach out to 2 or 3 folks that are in similar types of businesses and ask them what their experience is. And then that's a really good example of why I like quarterly reviews on sales plans. Because what I would do is plug the initial numbers into the sales plan, run for 3 months or even 2 months. Then it's pretty easy to come back and go, okay, well, how does our experience map to that? And how do we change what we're doing, and how do we change those metrics?
Awesome. Thank you. Any questions from the group? I don't see any in the chat, but feel free to unmute yourself if you have one.
Yeah, please don't make me talk to myself for an hour.
No questions.
Okay.
Yeah, I'm not going to let you get off that easy, Scott.
Thanks, Ken.
Quick question.
Yeah.
So some founders are just natural salespeople.
Sure.
Others are not, right?
Mm-hmm.
And when they start off, they usually have a small team, so they're doing everything. What advice do you have for those founders who aren't natural salespeople? How do you generate the lead? How do you connect with the decision makers who ultimately are going to say, yes, I will buy your product or service? How do you deal with 1,000 no's or 100 no's before you get that one yes, right? Can you elaborate a little bit more on that? Some advice?
Yeah, I mean, the how do you take no's is a whole separate thing about, how you get up every morning. Some people take that a lot better. Some people take it a lot worse. There's tons of things in sales books about how not to take rejection personally. So, I mean, that's a whole nother topic. But, if I'm a single shingle, I'm trying to go to market, and I'm not blessed with, sort of a natural skill set that's on the sales side, or I haven't had, time or inclination in my life to learn, that discipline. I think I pretty quickly try to find people in my friend group or in my ecosystem that can give me advice. And, once I synthesize that advice, I think, you're going to find you've got sort of 2 choices. One, you're going to get enough advice, and you've either got the time or the inclination to go out and start, trying to do those initial, calls and sort of test betting what you have yourself. Or B, if you're unable to do that and you don't have a team around you, then I think you need to find yourself some type of a tool to get to market, which is normally, trying to find somebody that can either, come join you as a co-founder. Maybe you're gonna have to give up a little bit of equity for that. Maybe you can find some way to have somebody part-time do some work for you and, pay them for results. I think you've got to do the research and see what your market looks like, what you have to do to access it, and then you pretty quickly decide, can I do that myself, or do I need to get some help? And if I need to get some help, what's it going to cost me? And is that a reasonable cost to bear? Ken, so I'm curious, I mean, you've got a ton of experience in this area. What would your answer to that question be?
I think your last statement about finding the right partner, co-founder if necessary, because you're right. A lot of people, they can learn, right? And founders that are open and willing to learn are usually able to do the role as, lead sales and marketing person. However, do you have the time? And it takes years. And Scott, you probably would agree. It takes really years to perfect the skills, the art of sales and marketing, and it's better in many cases to bring someone in who has that experience, as you said, sharing a piece of the company and the potential upside, but it also opens the founder up to do what they're really strong at doing, obviously in another area. So I think that's really sound advice, because as you said, and I would agree, there's some really great products and services out there that aren't successful because you can't sell them, or you sell them and market them improperly. And then there's some actual horrible products and services out there that make billions of dollars because the sales and marketing people can sell it to just about anyone. And and some of those big corporations are listed on the NASDAQ and on the stock exchange, right? So it's really critical to the success of the company. And either you do it and do it well, or you go get help.
Yeah, I think that's well put, Ken. And it's funny, you have some natural advantages as a big company with a strong sales and marketing focus. I mean, I worked for one of those big companies, and we did deals we never should have done because the customer wanted one throat to choke. We had a lot of levers to pull, and I mean, you're 100% right about that. The other thing you made me think of, and I think this is an important point. I'm looking at the clock. We still got time to get through the plan, but there's an inherent sort of, if you don't understand sales, thought that it's the person with a gift of gab or this big personality, and I have found that to be inversely true. I think that selling is both understanding all of the macro planning, strategy, et cetera, some of which we're talking about here, and also the micro at the customer interaction level, being able to do the correct things in those interactions. And most really effective salespeople I've met, particularly at the more professional and complex levels, are good listeners. They're good problem solvers. They're well trained in win-win negotiation. They're not just, big personality, gift of gab folks. They're usually pretty thoughtful, cerebral, well thought out folks. And I think it's really easy to go, well, I'm gonna go get this big, bold, brash talker. Those people, in my experience, oftentimes aren't that successful.
Scott, we got 2 questions in the chat, and then we'll let you do the example and then go to Q&A. Sure. Does that sound good?
Yeah, and I can pretty well fly through the example, no problem. Okay. I'll just make sure I got about 10 or 12 minutes for that, Cameron.
Perfect. So at what stage / revenue amount does a founder bring in sales leadership?
That's a good question. I think it depends on what you mean by leadership, Cameron. If you mean, hey, when do I go out and hire, a big, expensive head of sales? I think you got to wait a while for that. Those tend to be pretty highly compensated folks, either in terms they're going to want a lot of pay or a lot of stock or both. And I think, they'll only stick if they're in an instance where they can scale up. I think as a founder, you initially start building incrementally. You have to be a big part of the sales process yourself. And I differentiate that by, there's a lot of people that are fantastic in front of customers that shouldn't run the process because they're busy doing other things, or they aren't skilled or trained in, how to, get people interested in outreach. As a founder, you're generally the best person in front of a customer to get that customer to buy. You're an expert. They're going to trust you. You may not be the person to run that process. So I think initially I tend to want to get advice, build some relationships, start figuring out who I want to hire. But you have to do a lot of it, shoestring, get some help, hire one person before you go full hog. I'm invested in a company locally that's building a really excellent pod concept company called Grin. And, for the longest time, the two founders were the salespeople. Then they started hiring some folks to do outbound lead generation. They did their own demos. Then they had enough mass where they were able to really start taking those folks, make them salespeople, hire them more demo folks, and they built it over time. They just hired a sales leader out of the software industry probably 6 months ago after about a 4-year run. So I think you need to do it incrementally and be really careful about hiring someone super expensive with high expectations. So yeah, I have a lot of anecdotal stories we don't have time for, but I think you need to be thoughtful about that.
Awesome. And then the last question before the example will be, what is your experience on typical amount of equity one gives to a high-level CEO or COO who brings in key skills one does not have? So maybe more in the example of bringing in that salesperson to be a CSO or something like that.
Well, so there's actually, I think of like Ian and Ken on this call are probably better able to quantify that specifically. My experience and my take on that is it's greatly related to stage. So, if I decided to partner with somebody tomorrow for something that, wasn't product wasn't really baked, or maybe it was baked, but you didn't have any customers, I'm not going to make any money for a year. Yeah, I'm going to want a huge chunk of that. I mean, I might want half of it.
Right.
If you come to me, like Grin was the example of this, they're great local CRM for influencer marketing locally. If you come to me 4 years later and you're already, running $5 million in annual revenue, your recurring revenue, and you got a team in place and there's a marketplace, my expectation might be 2 to 10%, kind of depending. Ken or Ian, do you guys have a take on that?
Yeah, I think on the CEO level, you're right. So if you're bringing in an outside CEO and you're very much at the seed level, so pre-market, expect the CEO to be just behind you in terms of ownership percentage on the cap table. Maybe 5 or 10% less, up to, a CEO at minimum, even a few years in, is probably going to want 10% of the company, and that's when you're fairly established, still in a startup mindset. Obviously, if you're a company and those numbers change, but in any event, when you're bringing in an outside CEO, whether sort of at founder stage or beyond, you also want to tie that person to the business. So size is one question, and then vesting schedule is another. CEO is such a primary component to the company. Think about how many years you want that person to vest in. Standard vesting terms would be, 4 years to get 100%. Depending on your situation, you may go to 3, you may go to 5 or 6. COO is definitely smaller. So sort of take that same conversation we had, and it's equity levels at 50 to 65% of what a CEO would take. Maybe even less than 50%.
Cool. Thanks, Ian. Cameron, it's interesting. My answer to that question, I think, also encompasses one of my firm beliefs, which is, good founders, just good leaders in general. You don't necessarily have to have all the answers. It's good just to know what the right questions are. And I think one of the biggest pieces of advice I'd have to people, particularly starting out, is just, try to go to events and, mingle with folks and make friends and get people interested. So you got smart people to ask questions. I mean, my first inclination, when someone asks me a question is, well, what's my answer? And my very next thing, or maybe even at the same time, is who do I know that's smart that's got a better answer than I do? And I think one of the best things you can have is that crowd of folks that the right question, but you can bounce it off and they have the right answers. So I just think that's hugely valuable.
Yeah, and that makes me think around kind of like advisory boards and, recognizing you've been advisors to other companies. Is that kind of an approach for maybe getting someone to help with, initial sales plan structure is through an advisory board approach and using that know-how to kind of set the stage for future processes?
Yeah, and you can get people, there's a big difference between a board member and somebody active and someone who's an advisor. Advisor kind of expects, maybe once a week or a couple times a month, they're going to ask me for, 15 minutes or an hour of my time, or maybe have me do a document or whatever. And, people will do that in exchange for, a pretty small amount of equity, because it's not a big time commit. And my experience is most folks that have, kind of made it or have had some good experiences, they're willing to help the guy on the way up. I mean, most nice people are.
Well, we got 10 minutes left, so I think that's perfect timing for the example.
To keep me going through this quick, that was probably smart. So I'll run through this, and I don't know what everybody else's stop or your stop is. I'm certainly happy to spend extra minutes. I don't have a hard stop after this, but so I want to thank Chris Peacock, Cameron Burford, who are the founders of Aqua Oso. They're one of the 3 companies I invested in last year. And this is the work product that we came up with as our original sales plan for this year, which again has been massively changed since COVID, but it was helpful to have it to do that. And then you'll notice that this is heavily redacted with for numbers and for some of the specific market segments. But I still think it's a good illustration of what hopefully a decent plan looks like. So, I mentioned initially the introduction piece. So in terms of Aqua Oso, this was what we entered the year at, what we felt we needed to accomplish in the year. In their case, they wanted to describe their sales goals for minimum, median, and stretch, but we based all of our metrics on the median number. And then, after we wrote the whole sales plan, it was pretty easy to identify that there were, in this case, 5 things were really critical in terms of accomplishing all these metrics, et cetera. So we just called them out. So it's almost like an executive summary where you can go to this and go, oh, here's what they're going to accomplish this year. Here's the important components. You could see it pretty quickly. And then these are always my 2 favorite things in here. I'm a bit of a stickler on this. One is there's a task matrix and a timeline. I think that's really important to hold people accountable and to execute. And then just restating it's a living document. You really got to go back and revisit it because you're going to get some stuff wrong. So you got to change your map a little bit. So really simply, we started out with our gross revenue goals. They're a SaaS solution. So it's expressed in annual recurring revenue. So we gave our baseline and then we gave what our goal was. And then I mentioned before, I think these are really important additional sales objectives. So we have an existing base coming into this year. So we identified a number that we wanted to upsell because there are some different options within the subscriptions. We wanted to upsell the subscription. This year was a separate channel, so I just kind of blocked that out, but we had very specific revenue number for that channel. We had a total number of enterprise customers, which we reduced quite a bit due to COVID when we did the refresh. Core market leadership, we wanted the top 10 ag lenders. We got in some very specific geographic expansion metrics. We had a new vertical we wanted to expand in. Again, we're very specific with that. And then 1 potential game-changing client. That was a particular vertical. So keeping an eye on all those and achieving those as well as those, they kind of feed into each other. Those were for us important things. We already had the customer profiles and we knew them as a team. So we didn't go into an ICP here, but we did talk about how our customers buy and it really broke down. So for that solution, which it's basically all the water risk due diligence you'd have around ag land. So for investors and appraisers who are doing appraisals that are buying at a lower level less frequently, there's a very different way that they find us and we interact with them. Our big enterprise customers have really large, complex sales cycles, budgeting, data issues, et cetera. They buy completely differently and find each other very differently. And one of the new verticals we want, we're very much like these enterprise customers. That really drives how we approach the market and what our sales cycle looks like and how we structure our sales team. So that was really important when we started thinking how we wanted to approach it. And one of the things that we have, we talk about CAC, customer acquisition costs. As a new company, particularly if you're trying to be in high growth, you oftentimes can be losing money. Our customer acquisition cost is absurd. It's going down as we get bigger, but we knew that, but we wanted to identify that we were aware of it and we're trying to get it down. These are the activity metrics I mentioned. I think these are really important. These are the first thing we revisit on our regular sales calls, which in this case are weekly. So we knew from our own experience, and you can extrapolate this if you know what your sales prices may be. Here's what a new customer in the first year is going to spend with us. We knew what our revenue goal was, so it was very easy to divide that out and realize we needed 75 new clients. In this case, and this is, I think, pretty standard in a SaaS model, we knew about a third of the clients, or a third of the people that we reach out to will talk to us, and about a third of we'll get to a demo. And then about a third of those who get to a demo are going to buy. So then it was really easy to go, okay, well, we got to reach 833 qualified people, and we got to do 250 new demos. And based on our sales cycles being 60, 90 days, we knew if we didn't get all that accomplished by the end of October or November, guess what? We're not making our number. Once you know that, then it's pretty easy to A, track your process, or B, check yourself. Because if you think you have this huge marketplace, and you may well, and you realize this is what it's going to take to reach that marketplace, you start realizing really quickly, is it realistic? Do I have the resources, et cetera? And if so, great. And if not, then you have the ability to reset your expectations, maybe go raise more money, whatever it takes, but it gives you a really healthy reality dose. Because the worst thing is to have a bad plan. Measurement and tracking. In our case, we do, I mentioned weekly calls. And on those calls, we go over all the things that I mentioned. We go over our metrics. We go over our short-term pipeline for us, which is about 60 days. And then we go over our top 10 deals. And then for support of all of our outbound and also to track some of our pipe, we implemented HubSpot, which we got done. And you'll actually see some really tight deadlines on HubSpot in the matrix that I included. We put in incremental growth in sales and marketing roles to build up. We decided we were going to use a pod structure. Having this in place made it much more easy to back up when COVID hit. We were bringing on a director of marketing. We decided to outsource that. We were going to bring on someone to do outbound telemarketing and then eventually become a full-blown salesperson. We actually backed that off, and we've got internal people filling those roles until things get back to normal. We identified the tools that we needed, which you'll see here, and then additional budget above and beyond what we were spending that we needed to have on those. We identified marketing support, exactly what we thought we needed, and some of the very important channels for us. And then this right here, again, a lot of people hate this because it really is a high degree of accountability, but I think it's the only way to execute consistently, is we identified all of the tasks: adopting a sales plan, scrubbing the initial pipe so it was good, scheduling our reviews. You start getting down into the account exec job description and budget approved, beginning to run the ads, how we're going to do our outbound. Training materials in place. If you're going to hire a salesperson, you better set them up for success. How are you going to train them on the product? Are you going to have scripts for them for outbound? All those types of things. implementation of HubSpot and training delivered. It's super important. You have something in place. If people aren't trained, you're not going to get the most out of it. Procuring prospect lists. We have a partner strategy. So we assigned a list of partners in the ecosystem to specific team members and put timelines on outreach. That was accomplished. So as you drive down into here, baseline demo strips, up to updating the website. So we delved into some of the marketing, customer advisory council. These items right here were our geographic expansion, which we're still reasonably on target with. But if you don't put dates on these things and you're expecting revenue, and because you're not staying on top of them, they slide 60 days, guess what? You're not making your number. And when you start going out for fundraising, sell your company, whatever, if your numbers aren't good or your accomplishments don't map up well with your forecasts, it's a problem. So, channel partners on board, et cetera. So you'll notice, we have assignments, we have dates, and then we have yellow, green, red over here for where we were. And these are, again, this hasn't been updated in a couple months because it's the old plan. So we have who's responsible. And then next to last thing in here is our risk plan. So we identified our risk, what the impact is, high, low, medium, how probable it is, how we might mitigate it. And then we know whatever notes for discussion. I got to tell you, this case is no different. Every time I do one of these tables, and this again is data from all the team, I go back and I rewrite huge sections of the plan, realizing that, what some of the problems are or what some of our strategies really ought to be. So some of these are very specific to us, in terms of prospects or our marketplace, difficulties expanding. We identified a recession. So thankfully we had a plan, identified competitors, running out of funding, and how we might stretch our money or find more. Can't find sales and marketing talent, which is a big problem, a number of months ago. I think less right now with all the layoffs. Building other pieces of business, how's it going to affect cannibalizing, existing business, et cetera. And then the last thing we put in, a lot of this was driven by a SWOT analysis we did with the core team. So I didn't include this up here, but this is what a SWOT looks like. So we actually had that as an addendum, so we can go back and really remember what we were thinking when we were thinking it, if we ever need to go revisit things. So I think I'm 1 minute over, Cameron. That's what a plan looks like.
It's perfect with the later start. So we had one question right before you started on the example, so I'll let people collect their thoughts for those questions. But what is the small amount of equity you would be looking for as an advisor? So relating back, and then we can obviously come back to questions around the sales plan.
I think it really depends on how much work, whether I'm already engaged in it or not. What I think the upside is, if I didn't think something had legs, or I didn't think I could personally contribute, because, you need different people for different opportunities, I might not be interested, or I might want an outrageous amount. A lot of times, like if I'm an investor and I have a certain percentage and they want some additional help, it's very small incremental amounts. So that's really kind of a amorphous answer, but it could be as much as a fraction of a percentage, or it could be 5 or 10%, depending on how engaged I am, how much help I can give, how much I think the thing actually has legs. And I think most people would answer it the same way. Anybody else on here have a different opinion of that?
I think Ian unmuted himself, so go ahead, Ian.
Cool. Yeah, Ian, what's your thought on that?
Saw me coming. I would say advisor, if you're putting together an advisor board at the very early ages, advisors are probably coming in at 0.5% to 1%. Later in the game, it may go to 0.25% to 0.5%. And when you're thinking about advisors, these are people who are going to be there to validate ideas, but not necessarily do the work. So that's what those equity ranges are for. But again, just like with an executive hire, mistake I see people make with advisors is they sign them up and they give them the equity. I think probably 9 out of 10 advisor relationships, when you get a few years out, didn't provide the value that was hoped for. So just like an executive, make sure those shares are vesting. If you have an advisor agreement, and even if it's only for 0.5%, you get 2 years in and all of a sudden you haven't talked to your advisor in 6 months, cut off the vesting, find somebody who, is more aligned with the executive team and can help you grow the business.
And I think that responsibility, Ian, is, it's incumbent on both parties. Like if I have an advisor relationship, I feel like, I owe it to them to call them. So if I don't hear from somebody for a while, I'll just, check in, or, hey, you're working on something, or, hey, I saw this. But I also think if you don't talk to somebody for 6 months and you haven't called them, shame on you. I mean, you ought to,
right.
If you've given up some equity and you asked them to participate, you ought to call them and ask them.
Yep. That is true.
Yeah, it's like any relationship. They fall apart because of both parties. So, anything else, Cameron?
No other questions in the box, but if someone wants to unmute themselves and ask a question, go for it, or we can bring it to a close.
Cool. Hey, and if something comes up later, Cameron, you can either be a conduit, or I think you had something in the deck where there was some contact information as well. So, if there's a question or two.
So if you go to slide 10,
there we go.
that's all of your contact information. So I'll be sharing that after the session. So I'll be able to send that your way, and you can connect with Scott on LinkedIn or shoot him an email if you have additional questions. But without further ado, I guess I'll close our session here and say, let's give Scott a virtual round of applause with the little thing. But thanks for taking the time and volunteering to support with this session. Super good information and really robust content around kind of building out that initial sales plan. So I hope all of you enjoyed the session, and if you want to learn more, definitely connect with Scott. He's a great ambassador for the entrepreneurial ecosystem, and happy to be of support. So thank you again, Scott, and thank you all for hopping on.
Hey, thanks, Cameron. I hope it was helpful. Thank you for the invitation.
Yeah, my pleasure. And we'll be sending out this recording as well as the PowerPoint slides, in a day or two. So thank you all for being on, and have a good one.
Too. Thanks.
Bye-bye.